Good morning, good afternoon. Welcome to our annual result webinar. Before I start, I want to thank you for your continued support in the past years. As we all know, 2020 is a challenging and volatile year, and it turned out that Value Partners had delivered a strong result. For the next 10 minutes or so, I'll go through the highlights of our last year's results, our latest business update, and I'll also talk about the company's strategies. So let me start with a few highlights. Our net profit reached 1.38 billion last year, up 169% year-on-year, which was also the third highest profit in our history. We achieved an ROE of 28%. We declared 34 cents dividend per share, which is roughly 6% dividend yield. We have also made significant progress in our key strategies. They include diversifying our AUM from Hong Kong home market into overseas markets, further broadening our fund menu to leverage on our brand and platform, and capturing opportunities in one of the world's largest saving pools, which is the China onshore market. So these areas will continue to be our key growth drivers in the coming years. And I'll share more details in this presentation. Before I go on, one point to note is that even though we had a net outflow of $2 billion in AUM last year, the outflow were mainly from fixed income funds distributed through Hong Kong retail channels. Most of this AUM do not have performance fee structure and therefore earn a relatively low net fee margin. On the other hand, for the high margin money that earns performance fee, we see a strong rebound in AUM. It reached a low point of $6 billion in the first quarter last year and rebounded to $9.1 billion as of the end of last year, and now account for 65% of our total AUM. This high margin money mostly comes from our equity fund and segregated China onshore mandates. AUM with performance fee structure generated 3.3% free margin last year. Obviously, this is not sustainable because many of our equity funds generate 20% to 80% return last year. But if you look at the 3-year cycle, this part of AUM has actually generated an average of 1.5% net fee margin, which we think is a more sustainable margin. By comparison, the remaining AUM which doesn't earn a performance fee only generate a net fee margin of 66 basis points on average. Next, I would like to give you an update on our progress on the key strategies. I would like to start with geographical or channel expansion. In the past few years, we have focused on expanding our distribution reach to the overseas markets, diversifying from Hong Kong, our home market. We initiated our overseas expansion effort 3 years ago. Our efforts include enhancing the sales team in several ways. 1. Beefing up the institutional team. 2. Strengthening consultant relationship. 3. Setting up the UK sales office. 4. Actively looking for distribution partners globally. As a result, we have achieved significant breakthroughs in some of the key markets last year. 150% AUM growth in the European and Japanese markets, and 58% growth in the North American market. Total AUM from overseas market increased from $2.3 billion in 2018 to $3.8 billion in 2020. And now it takes up 27% of our total AUM. Here, I would like to share a couple of notable examples of our progress last year. In Europe, we have won a very prestigious £550 million China equity mandate last year. The mandate was awarded by M&G, one of the largest asset managers in Europe. We successfully won the mandate after a beauty contest, where we compete with more than 30 other global asset managers. M&G likes our investment process, investment team stability, and strong back office support. We score high marks in all aspects of the selection criteria, and have proved that we meet the standard of being a world-class China investment expert. This will open doors for us to the European institutional markets. Our sales team in Europe is ready on the ground to capture the opportunities, and we see the increasing interest in China equity market in the region. We also make significant progress in the Japanese market. Our key strategy is to identify local distributors, mostly financial conglomerates, and to target the Japanese retail market. One of the highlights was a relationship we established 5 years ago. In 2018, we launched a co-brand fund, which achieved around 70% return last year, and is the best performing fund under the Japan Fund Greater China Equity category, according to Morningstar. Due to its good performance, it has gained a lot of publicity and attention. This year, we will focus on penetrating into more Japanese retail distribution channel, riding on our positive momentum in the market. For the rest of Asia, we are also actively looking for opportunities in markets such as Korea, Malaysia, and Thailand, from both intermediary channels and institutional investors. Next, I would like to show you our progress on fund menu expansion. 5 years ago, we have begun our effort to diversify our product from traditional single country equity fund to other fund categories and asset class. Total new fund launch in the past 5 years already contributes 27% of our AUM. In the fixed income space, we have already gained a sizable scale and are now managing more than $4 billion in AUM. The focus for us this year is to push our thematic equity and multi-asset funds through the intermediary channels. We have observed a growing trend from retail investors in these two asset classes in the Hong Kong retail market. According to Hong Kong IFA, last year, 10% of gross subscription are from thematic funds and 21% from multi-asset funds. And both asset classes have the highest growing in AUM in the past years. During the past 5 years, we have launched a few thematic funds and multi-asset funds. All these funds had significant AUM growth last year, as you can see from the chart. Moreover, they all have very strong fund performance, and most of them has achieved Morningstar first quartile peer group ranking. And before I pass to William Zhong, who is our head of China business, to talk about our China strategy, I would also like to touch on this year's outlook. We expect the financial markets to remain volatile and uncertain. And in the first 2 months of this year, we see continuing outflow from our fixed income funds as investors are still rotating into equity markets. We also see outflow from a single white label mandate, which we manage for an intermediary channel. The redemption is not due to a performance issue, it's because they decide to manage part of the mandate in-house. Other than that, most of our business lines are growing steadily. Going forward, China onshore business, overseas markets, and broadening our fund menu will continue to be our growth driver for the next few years. Next, on our China strategy, I would like to introduce William to you. He joined Value Partners 2 months ago, and he is a very seasoned professional in the China mutual fund industry with more than 26 years of experience. Before joining Value Partners, he led a team of more than 80 salespersons at Harvest Fund, which is one of the leading asset managers in China. William will oversee and drive the growth in our China business, and I'll pass over to you, William.
大家好，我是钟俊杰，很高兴有这样的一个机会来跟大家进行交流。那么我在加盟惠理之前我在嘉实基金服务长达16年之久， 嘉实呢作为国内老10家基金管理公司，也是管理规模最大的这个基金管理公司之一。我非常有幸呢负责嘉实基金的零售业务。那么嘉实的零售呢，总共呢有这个团队人员超过80人我们在中国呢，是应该说是这个覆盖面最宽服务最细的一个销售团队那么嘉实基金呢，在国内呢也有很多良好的业绩记录，比如说我们曾经呢在2006年一天募集超过419亿那么我非常期待呢，把在嘉实的这个市场经验能很好的融入到这个惠理的这个文化中来，为惠理呢在中国的业务发展添砖加瓦那么可能很多朋友比较好奇，我为什么会加入到惠理呢？我觉得呢，主要是惠理的投资文化惠理的这个价值观对我有非常大的吸引，而且惠理提供的这个平台对我而言是一个创业的开始我本身带着一个创业的心态加盟到咱们惠理我觉得呢，我能很好的把我的这个经验来服务给惠理我期望呢我们未来呢有一个良好的发展。那么惠理中国业务呢，在20年度整体上来看还是获得了比较良好的发展。我们虽然整体规模呢略有下降，从17亿美金下降到14亿美金左右但是呢我们有3块业务，实际上真正下降的只有1块业务，就是银行的机构客户。那么这个银行的机构客户的下降，主要原因呢是政策性的因素，因为20年呢中国呢有一个资管新规为了呢让这个资管新规的这个规范得以执行我们的一家比较大的银行机构呢做了一个赎回但是我们在这家机构的业绩记录是非常良好的。那我们另外的2块业务，我们的保险机构有明显的增长，去年的规模增幅达到了19%。那么我们的零售业务也获得了一个非常快速的增长，去年的增幅呢达到了32%实际上今年我们的互认基金呢规模也有快速的增长。那么在机构业务方面实际上惠理的这个架构非常的良好，为未来呢的发展呢奠定了比较良好的基础。我们在这个保险客户方面，我们跟主流的保险客户都建立了业务关系比如说像人寿、像平安、像太平洋保险等等。我们跟银行资管也有良好的业务架构，像工商银行、招商银行、交通银行、中信银行、中国银行等等。那么零售业务方面我们期望呢这个未来也有比较快速的发展。我们现在呢跟像中国银行平安银行这个像这个中信证券、中金公司、华泰证券等等这些比较领先的销售渠道，我们目前也有良好的合作。展望未来，一方面呢我们会继续拓展我们的机构业务，加大和保险机构和银行资管机构的这个业务合作那么我们在渠道方面今年呢我们明确的将会呢增加至少3到5家的代销渠道，我们会建立专门的业务团队然后呢我们也还会呢建立良好的服务网络，我们还会很重视跟互联网渠道的合作。总体而言，我们对中国业务未来的发展充满信心。再次感谢大家。
Thank you for joining us today. In 2020, the public health crisis led to volatile markets and affected investor confidence globally. Despite this challenging environment, Value Partners prevailed with a decent performance and results. This is thanks to the group's strong investment capabilities and robust operational foundation, which puts us in a position to stay focused on executing our long-term and strategic priorities. In the financial year of 2020, the group's net profits increased significantly to 1.38 billion Hong Kong dollars. The majority of the strong profits was held by the stellar fund performance during the year. Our total revenue rose by 59.7% to 2.56 billion Hong Kong dollars. Gross performance fees, the major source of our revenue in 2020, increased significantly to 1.47 billion Hong Kong dollars. Gross management fees is another major contributor to revenue. It dropped by 25.6% to 1 billion Hong Kong dollars, on a 22% decrease in the group's average AUM to 12.6 billion US dollars. Our annualized net management fee margin remains stable at 61 basis points. At the same time, our total expense rose by 49.2%, mainly due to the increase in management bonus, which is based on 20 to 23% of the group's pre-tax profits. Excluding the increments in management bonus, the total expense decreased slightly by 2.3%. The group's earnings per share is 74.4 Hong Kong cents in 2020. It is a notable surge compared with 27.7 Hong Kong cents in 2019. On the next slide, the group's AUM stood at 14.2 billion US dollars at the end of December 2020. The movement was mainly attributable to the positive funds returns of 1.9 billion US dollars, offset by net redemptions of 2.3 billion US dollars in 2020. In our view, redemptions were the results of market frustrations when the global public health crisis kicked in, rather than anything performance-related. To highlight the performance, the assets-weighted average return of funds under management rose by 16.9% in 2020. By the end of last year, over 30 of our funds surpassed their respective high-water marks. Our flagship product, the Value Partners Classic Fund, increased by 37.6% during the year. The Value Partners High Dividend Stocks Funds, which invest across the Asia ex-Japan region, recorded a gain of 13.9%. Also, an all-China equity product, Value Partners Chinese Mainland Focus Fund, generated a net return of 73.6% during the year. Now, let's take a look at the AUM analysis. The charts show the breakdown of the group's AUM using three classifiers: brand, strategy, and geographical region. Our own brand funds remain the biggest contributor to the group's AUM, standing at 73%. By strategy, absolute return long-biased funds, which take up 67%, continue to represent the largest shares of the group's AUM. It is followed by fixed income fund, which took 30%, where Value Partners Greater China High Yield Income Fund was the largest contributor. In terms of geography, clients in Hong Kong SAR continued to represent the largest segment, contributing 64% of the group's AUM, and there was a notable rise in shares of assets managed for clients in Europe, which increased to 10%. Largely driven by newly onboard Chinese equity mandates managed for M&G in the UK. The share of AUM contributed by clients in mainland China remains stable at 10%. Our AUM from China stood at 1.4 billion US dollars as of the end of 2020. Moving on to cost management, the group continues to exercise stringent cost discipline. We will keep fixed operating expense covered by net management fee income, which is a relatively stable source of income. For 2020, the group reported a fixed cost coverage ratio of 1.7 times. We will continue to take a cautionary stance in cost management. We have implemented measures such as resources realignment and ongoing cost control to manage future business headwinds and develop longer-term strategic projects. So now, moving on to next slide. The group continues to run a strong balance sheet with nearly 2 billion Hong Kong dollars in cash and cash equivalents as at the 31st of December 2020. The total equity for 2020 stood at 5.4 billion Hong Kong dollars. We also continued to maintain a position of zero debt. We have high convictions on our in-house investments capabilities and the allocation positions in the markets. In the past years, we have also been deploying our house monies into our own funds and other investments. In 2020, we recorded a realized gain of 71 million Hong Kong dollars and a substantial unrealized gain of 187 million Hong Kong dollars from our house investments. We invest in our own funds alongside with investors, where appropriate. This demonstrates our willingness to achieve an alignment of interest between funds investors and the group. In the coming year, we plan to allocate more of our house cash to invest in our products for potential stable returns. On the other hand, despite the low yield environment, the group's overall effective interest rates and interest income generated from bank deposits were higher than that of market's average. This is contributed by our solid relationship with various banks. So now this is the end of our financial highlights part. Thank you.